All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Wednesday, the 1st of the month. Fed day today. We'll go over all those details from the Fed announcement. I mean, first of all, I guess I could kind of hit that in the beginning of the video. I don't think we really learned that much. The Fed just basically said they don't see any major adjustment into rates in the near term. So I don't know why people were thinking that there was going to be a rate cut, but that's what Fed Fund futures were implying. Actually, let's take a look at that and see if that actually changed at all. So if we go to Fed Fund futures on Bloomberg, there was a 0% of a rate hike going into the meeting. They did mention a couple things about, there was a lot of statements about inflation, but you can see there's no probability of a rate hike coming anytime soon. That's zero. There's still a cut probability, but I don't see it personally. Again, just my opinion, and they clarified that, and I don't think the market liked that when they said that there wasn't going to be any real chance of a cut in the near term. So I think that's what the market reacted to a little bit. And but these Fed days are tricky. They're just ripe for a reversal day. I try to put out as much information on the private Twitter feed. And if you listen to my video yesterday, it's exactly what I said in the video yesterday, was that nobody was expecting anything for today. It seemed like it was way too complacent going into a Fed meeting. They're not going to do anything, but there's just these Fed days, for whatever reason, they're just ripe for reversal days. And that's basically what we got with these Fed conference. I'm not a fan. I was making a joke earlier on Twitter that no one is a fan of these press conferences for every meeting. But the initial reaction, it's very tricky. I'm using that word a lot, but the initial move that we see, you cannot chase it. So again, this video is for information purposes only. I'm not giving out advice, but you cannot chase these moves. That you see on the first at 2 o'clock. You have to wait until the Fed conference, because here's what we started to do. Once the major headlines were released, it's just a false move all over the place. Check out the U.S. dollar as well. So the things that I watch, it's the same plan every Fed meeting. You watch the U.S. dollar, which also started to go down, and then look at what happened. It ended up just positive barely on the day. But gold did the same thing. Knee-jerk reaction, wrong way. Going up at first and then ended up down 60 basis points. Same thing with bonds, everything. And I'll show you. I try to give the information out on the private Twitter. Basically, do not chase that first move that you see, because it's usually wrong. It's one of the most. I would say it's one of the most telegraphed moves that happened on Fed Day. Originally everything goes wrong way first. And it just happens time and time after. I don't know why. It's almost like it plays out to what the opposite of what people think. But but it is funny how that works. How it just flips around. So what else was kind of the driver of a little bit of today's weakness? The ISM number was weaker than expected. I'm not going to bring that up because I already tweeted it out earlier. But also, there's a couple things that are throwing off some warning signals. So, copper was down, well before. I saw someone writing an article, and I don't want to call anybody out, but logically they would say, oh, it was because of the ISM data that came out at 10 o'clock this morning. Wrong. I mean, that certainly didn't help, but it was already down over 2% prior to 10 o'clock. So it already looked like something was wrong with copper, and that's something that we've been going over in the trading room, every day, is that this copper just failed to kind of go higher here and get to 3. And a lot of people were getting bullish on copper. I was not one of them. I wanted to see a definitive move to the upside, but we've broken to the downside. There is a virgin point of control that's been taken out. You're going to hear me talk a little bit about those. So for me, these days are to try to be as conservative as possible. I realized I put on a couple trades yesterday, And with the Apple results, I was hoping that we would get a little more morning strength in a couple of the names, but I just didn't get that opportunity. So, if you're a member of Tribeca Trade Group, sorry to be in some trades and out of them the next day, but I would rather get out of them if they're just not going to work. So I know that's kind of frustrating, but I'll show you my trades for the day. And I'll show you what I put on the private Twitter this morning. But I was able to take a target in keys, which I put on yesterday, and then I just said the hell with it. I'm getting out of it. I took it off at 250, and it just wasn't doing what I wanted. Same thing with Palo Alto that I put on yesterday too. Not doing what I want out of all Palo Alto. I put on a Johnson & Johnson trade that worked out very well. I think we talked about that at the end of the day yesterday in yesterday's video, and sure enough, that was very active in May calls. I don't want May calls at this point, so I went out to July, doing a lot better with doing it that way, going out a little bit further. I think people are so wrapped up in short-term calls. It's one of the reasons I put out my performance for the year, and I had a couple questions like, what's the secret to option trading? It's to not for me. It's to not really take huge positions with them, and to give them plenty of time, and to scale in a bit. Because a lot of times, these option prices it's different than trading stock, right? Stock, sometimes people think that your first entry should be your best, and you don't really want to add to a loser with stock. In options, it's completely different. The prices are so sensitive, and they're so sensitive for short-term positions. If they suit your style, using weeklies or May options at this point, then have a ball. It does not suit my style of a swing trader and holding for a couple days to maybe a couple weeks. You just have too much theta decay, and the prices are just too sensitive. Sometimes I go over this all the time, but even if the stock doesn't go your direction and it just chops, you lose so much money in front month options or front week God forbid, front week options, that it's really helping me to just go out a little bit further and almost like replicate a stock position. I'm very good trading stock, so if you almost treat the option like a stock position, and if you're using like a stop on a chart rather than just like a 25% stop, in the option price, to me it just is a lot more flexibility you have when you go out, and you don't have to pay that much more. So anyway, that's enough of that. I could go on for a whole hour about picking the right options and strategy and so forth, but that's what we go over in the trading room. What else did I do today? TLT, which we have talked about, how there's been a colossal amount of money that's been going into TLT, both in options and into the ETF itself. There's been a lot of articles on Bloomberg about that too. Lisa Abramowitz does a great job. She's been tweeting out the flows just as I have for the last couple of weeks about all the money that's been going into TLT. So, I even said, bonds are sensitive, and I took my second target. I forced my second target in TLT because you just don't know what's going to happen with this. And I think this actually, I don't know if this put in a reversal day as well, but you could see how far off this closed off the highs. So, that's the other thing with options, is make sure you hit profit targets. I could give you an example, right? And to not get overly greedy with them. We got into a DRI position. This is Darden Restaurants, Olive Garden, right? Unlimited breadsticks. But I got in here on this trade. Oops. And we took, Thinkorswim. I got in here, right? As this broke this little downtrend, and I took profits all the way up. And I think the last day up here was where I got out of the position. Look at it; it's all the way back in a matter of 3 days. So that's kind of how you have to think about things. Is with the market goes up and goes down, it's you can always restructure the trade. And I actually threw a couple calls on today at the end of the day. Just because it's right back to where it was literally 2 weeks ago. And your option price, if you just sit, and even though I was in July for DRI, they're just so sensitive, the option prices. So to me, that's how it works for me. And that's how I've been, really trading very well by doing it. And then, just cutting positions if you don't think they're going to work. It's no problem. You lose a little bit of commission, but you could always negotiate that with your broker to get your commission rates down. But it's better than just sticking in a trade when the market starts to turn. So yeah, I think I had in a couple, yeah, July, giving them plenty of time. This way you can scale in, if you get more of a sell off tomorrow. Um, I tried playing a little bit of Q puts, but I got out of the Q puts once Powell was done speaking. And that's when the market really started to sell off a little bit. So what does this mean for the time being, for us to kind of have a reversal day? Let's look at the charts on the Qs and IWM. So again, I'm not really viewing this as a negative, even though I think I'm not a fan of that copper breaking down like that. That's not very good for emerging markets. But at this point, we've had such a run. I would love even if price comes into the 20-day moving average again. Now, again, that would be very cute, and that would be, to say that it's just going to stop there is wishful thinking. But at this point, I think so many names are exhausted to the upside. This software names, I can't personally buy any more of these software names. They've just gone too far, right? We looked at Twilio yesterday, which was all over the map, right? And I was reading a note, that looks like a major reversal bar in Twilio. The problem is it's just gotten too expensive, right? So I mean, let this thing come in for a bit. I mean, imagine if it comes in here to 110 or even to 105 and checks back here. I mean, and sorry to say this if you're long some of these names, but I just think some of these names they need a really good breather. We did see some puts that were bought earlier that I think that were bought in IGV, which is the sector that this belongs to, software. But again, these names will come back. But I think even as we're watching other names report in this group, even if they're beating earnings, they're not going up as much. So it just tells me that the move has been realized. So if you're patient, again, this doesn't mean the end of the world or anything like that when I'm talking about, but all I'm saying is that I'm welcoming a little bit of a pullback at this point, because it just gets too hard with the volatility so low. Now it's the VIX closed on the highs, so I would expect a little bit more volatility. At least I don't have a crystal ball, but usually when the VIX closes on its highs, and the market closes on its lows, it's usually more of a more than a 1 day event. So I would not think that anybody should be surprised that we're starting to get a little bit of volatility. Again, I talked about this for about 5 or 6 minutes in yesterday's video, that I think we need this a little bit at this point. So, lighten up risk, and again, that's what I did this morning. And then maybe look for some different things, right? I mean, the J&J that we went over in yesterday's video, we talked about how there was a lot of Pfizer calls yesterday, but I think the J&J can push higher here. A couple other things like, yesterday utilities. Utilities I don't know if I want to mess with here, because a lot of them report earnings the next couple days, but definitely something to keep an eye on. So we'll have plenty of more trade ideas as the market kind of digests. There's probably going to be some other areas that outperform a little bit. Apple, let's see, where did Apple? Oh, Apple actually gave back a lot of the gains. So, let me go over a couple other things. I wanted to talk a little bit about China. And the other thing is, right, there was another headline about a trade deal possibly coming as early as Friday. So what happens when that news comes out, that the probability is getting closer and closer and the market sells off? It means it's priced in, right? So we talked about this BABA earlier. This BABA had a great day for day traders, but I said, I called this out in the trading room. I said, watch this 191.5 level. That's where the Virgin point of control is. I said I would be a seller there, and sure enough, this is the case with these Virgin point of controls, is that a lot of times the price will go a little bit higher, and then it will revert. Right, and the same thing. I know Netflix gave a lot of opportunities for day traders, but this is where it ran into this morning as well. So let's see. Let me just make sure I've got the right one up here. But this also hit one of these too, and it managed to get a little bit further. But you know, the way that I use these is to basically take to twofold, right? If stock's trading down here, you want to target these for your exit points, and then number two, you don't want to establish new positions on them. So that really helps a lot in avoidance of chasing performance and chasing names. Now, do I think that this group is over with or done? Not necessarily. I mean, Bob is going to report in about what, a week, 2 weeks. So let it digest a little bit after hitting this one. Notice that there's another one up here at 207, but at this point, let it digest for a little bit, and then let the price maybe float back above 191 and a half. But again, spot on in terms of calling out some of these levels. And I don't think I tweeted out the Netflix one, but I tweeted out the Baba one. But again, we're going to be giving a webinar next week on value areas and the market webs study that we use that is only available on Thinkorswim, but we're going to be going over more in detail. I get more and more questions every day about how to use version point of controls and using the value areas. So we'll be doing that. It'll be a member only webinar for next week. So if you're interested in this indicator, like I said, it helps me tremendously, and I think it's proved its weight as I talk about it over and over. So we'll be doing that next week, and I think a good time to do that. Square, geez, another bummer, by the way. I did put on a small trade. I don't risk a lot on earnings trades, but as I said, and when I tweeted it out, you have to be in it to win it. I think it was worth a shot, even though it's down huge. Because listen, you just don't know what these names are going to do, and if it would have been up huge, and I wasn't in it, I would have, been pretty angry about it. So I think all in all, it's fine. But here's some of my notes. My plan, this was early in the morning, take profits. I think I already showed some of the names that I got out of. This should be Palo Alto, I don't know, PANW. TLT, I took a couple profits. I said gap up days are very difficult, a lot of reversal. And again, I said this 6 hours ago. Fed is going to need to stay really dovish for this equity party to continue. All right, I said out of some risk. Would have liked to get out of all of them for more profits, but that was the plan going into the Fed meeting. And then I just, took a look at some things. KWeb, I said just really don't want to add anything, which I stick to my guns and don't add anything until the day is really done. But I talked about Baba. Yeah, I mean, notice, I think this is an interesting chart to follow the next couple days. This is the Chinese Internet ETF. If it would have closed on the highs, I would say, hey, I probably would have added something at the end of the day. But it didn't. It also had a little bit of a reversal bar, although it didn't give back any of the short-term moving averages. So anyway, we'll leave it here. I think that's enough. Again, I would not get super negative if we do have a little bit of a pullback. It's overdue, and I would be embracing it just to kind of clean some of the weak hands out of the market, and then we can go from there. And keep in mind, this is traditionally, we've had a great earnings season in terms of price action for the last 2 weeks. Usually it's choppy, so I've been very grateful for the price action that we've had the last couple weeks. Just put this in a big frame of mind. All right, guys, have a great night. See you tomorrow.